as an investor, it's very clear. It's office REITs, right? So any future injections, it's only office. So we have a lot of room to putting in new office buildings. No? So we won't be mixing it with other asset classes or asset types, because that kind of, I think in the long run, that the product, the REIT, more volatile. We've earmarked the proceeds for 21 projects. 15 of which are going to be new BPO office buildings, which we are planning to build in places like Pampanga, Bacolod, Davao. The objective of the group is to eventually put in, all the assets into MREIT.
Whoa.
And, or a significant portion of it, right? And our goal is to be the largest office REIT in Southeast Asia.
You were talking about 85 buildings as part of, or 85 tenants as part of the REIT. In terms of percentage and occupancy, what does it account for?
Yeah, we are currently already around hovering around 95% occupied, leased out. That's already considering that certain clients, some clients sometimes during the height of pandemic, because they didn't need so much space, so we would rationalize spaces already, because our normal occupancy rate before pandemic was around 98 to 100%. So 95 for us is actually relatively it's already on the low side. So we definitely do expect, though, by the time we list, that we will get back to the 98%, because quite a lot of our new contracts are coming within the last quarter of this year. Hence the optimism, in the sector and in the assets that we're putting into the REIT.
For those who are watching this and want to use like a benchmark for this, is there a healthy level that they could say that, okay, this is a very, very good occupancy rate also, at least for the benefit of potential REIT investors as well?
Well, the industry now is around 89%. No. So, and you tend to be, you're lucky if you get to the 90% level. We have always been, modesty aside, I think Megaworld has always been a bit better than the industry in terms of occupancy. Again, simply because if you were to choose a building that was in the middle of nowhere, not the middle of nowhere, in the middle of somewhere, but effectively on your own, where the ecosystem around you is not within your control, so connectivity and all that, it's not really exactly optimal, versus locating in a place that is, well populated, there's good housing options, there's loads and loads of amenities, your employees are extremely happy here. If you were to choose, if you had two spaces that were empty and vacant, and you were a client and you wanted to choose between the two, you totally want to gravitate towards the second type, right? Or within our townships. And that's the proposition that we always have for our clients, is that you do not actually just rent a building, you're actually renting an entire, or you're coming into an entire ecosystem filled with fun choices, I guess, and amenities and essentials, and that's, I think, is really the biggest selling point, and biggest advantage to being in a Megaworld township or Megaworld building. And that's why throughout naman, various years and various quarters, we've always performed better than what is the average occupancy rate in other areas.
Above average occupancy rate BPOs, among those, do you have like a figure on your average lease, the average tenant lease? How many years are they locked in?
Our average right now is around when you for the MREIT itself, it's around 4.7 years, no? So almost 5 years. That's the average lease expiry date for the whole portfolio. But if you look at our contractual terms, they're anywhere from 5 years to even up to 10 years. Because some of our clients, they take entire buildings, or they take the equivalent of entire buildings, they spread it out into different buildings, but they have like, if you add it up, it's like they're like occupying one building. So that makes it, that's why they tend to take a longer lease term, and that creates stability. To be honest, no, that's the kind of stability you're looking for as well when you're looking for a REIT, no? Or that's the kind of stability you want when you invest in a REIT, or that's the kind of stability that MREIT provides.
I think there's a big chance that the BPOs sort of immune to this, but from an office space level, I'm curious about how work from home and how this pandemic has sort of also evolved the office space industry, because you mentioned it earlier that there were some offices that tried to make their rental space smaller. I guess my question is, where do you see the office space industry over the next few years, given that there will still be some businesses that will opt to be working from home as well?
I think the work from home is temporary. It's definitely, for multinationals, maybe it becomes a more relevant way of operating, no, maybe, but again, it's not optimal. There's a lot of things that are lost, obviously, when you do work from home, productivity, etc. But in a BPO setting, I think that's even more difficult, no? The first and foremost, this is a high service level type of industry, no? They're high productivity as well, and when you do this in a work from home status, it's very difficult to be productive, because sometimes a lot of homes, or Asian homes, and generally Philippine homes, are rather small, no? Add to that it's very unique in the Philippines that you have the situation where you have multiple families or multiple inhabitants. In our case, we have one condo. Some condo units are being lived on by being inhabited by many people, no, 2 or 3 people, and then of course children aren't allowed to get out of the house, so you have that factor as well. It's just very difficult to be, to have that quiet space, right? Or to seclude yourself and to really do the work you're supposed to do for BPOs. So I think in that respect, I think productivity suffers, no? And of course, clients will always audit that and say, hey, that might not be the right way to service, to service us. We expect more, no? So that, in that respect, that's one factor, no? Of course, another factor is data privacy, no? Of course, you have, especially for financial institutions, etc. When you have client information in terminals that are outside the office, that is always a big risk as well, right? And of course, and of course, there's a whole other slew of challenges, no? When there is a calamity, or lack, and then the most obvious, of course, is the obvious difference in internet connection or internet bandwidth from the residential area and even in the corporate area or office areas. So those are some of the problems that we have seen. And that's why, although some of the BPOs have successfully migrated some of the work to homes, but that they just did that. I think that's just a stopgap measure because of all the restrictions and the difficulty of bringing people to the office, right? That's why, like, I go back that the township concept is optimal. I mean, we joke now that living in a township, live work, it's like you have been working na nga from where you live, no? Working from home. That's the internal joke. But really, the work from home is, you can address that further in a township level because you can create a bubble between your home and your office, and it's just very easy to get to the office because you don't have to commute, you don't have to expose yourself, right? But yeah, in my opinion, I think work from home is temporary, especially for this sector.
I'm sure a lot of people would want to know this because there's already like 4 REITs that will by the time we're putting this video that will be out in the next in this time frame. What makes MREIT special in this particular listing?
Again, when you invest in a REIT, it's like you invest in a property that you will purchase for yourself, right? Because effectively you're purchasing a property which you will yield rent. So you have to look at location. So you look at, our REIT is predominantly in Metro Manila, okay, and half of our REIT is in Port Bonifacio area. That alone is a very superior proposition. We're very, we're not kind of all over the place. We're not outside Metro Manila. We're there. Now, with the exception of Iloilo, but Iloilo, again, that's within the Megaworld Township, and Iloilo as a city is really now, we're 100% leased out, and we have a wait list of clients wanting to get in there. The infrastructure in Iloilo is top class. They have good airport, good roads, they have good schools as well, good power supply. Those are all the, you're basically ticking all the checks and the boxes. So that's the quality of the assets. Number two is it's very focused. Okay, our assets are focused on BPOs and multinational companies. That makes up more than 90% of the portfolio. The rest are auxiliary clients, like on the ground floor of the buildings there are sometimes a bank, convenience store, but those are all also serving, and those are all serving the building. But predominantly we're very focused. It's not a mixed basket, meaning we're not mixing things in there. So that's definitely what makes it also a very good superior proposition. Also, we're in the REIT. All our assets are 100% put in issue. We're not putting in parts of assets. No, we have a mixed use with a hotel. We didn't separate the hotel. We put the hotel in also, but what we did instead was, because the hotel, it's half hotel, half office. So we didn't want to split it up. We put the whole asset in, but we just assured, because we didn't want you to be exposed to the occupancy swings of the hotel. We assured the income already for the hotel, and we took on all the expenses ourselves. Okay, so we're giving you all that, and you have full ownership of the building. Okay, other REITs I know are not yet full ownership of the building. Some of them are, they have this right of use, which means you're effectively just leasing the building as well long term. So you don't really fully own it. In our case, you fully own all the assets that are being placed in the REIT, or at least MREIT owns all the assets here in the portfolio. As an investor, it's very clear. It's office REITs, right? So any future injections, it's on the office, right? Because we have a huge runway. We only put in 16% of our portfolio here. We still have a long way to go. So we have a lot of room to putting in new office buildings. So we won't be mixing it with other asset classes or asset types, because that kind of, I think in the long run, that the REIT more volatile. When you mix it up with different kinds, when you start putting in other types of assets, it should be pure play office REITs. And then of course, last but not the least, I just want to say that we have a strong commitment to the BPO sector. We continue to expand this sector. We were the first to get into the BPO space, Eastwood City being the first ever cyber park. So we are the first, and we continue to invest. Even during the pandemic, we were probably the only one of the few developers who continue to build office buildings during the pandemic. That's why between last year and this year, we built maybe around 80,000 square meters of office spaces. And as a company, we're also looking at the future. Why? Because we think that BPO sector is also going to be transformed and has to evolve into a higher sort of value, to also go up in that value chain. And that's why we are also investing in the future. And that's why a month ago, we launched the Dr. Andrew Tan Data Institute with the De La Salle University. It's a partnership between Megaworld and De La Salle. So and we are building a campus in McKinley Hill. This is the first of its kind. There is one other data science school, but it's mostly for master's degrees. This one is for undergrad, masters, PhD, and we hope that through this we can inspire action, inspire movement, and we help train the next generation of Filipino data scientists. Because we believe that that's where the BPO sector is going. So we have a very long outlook for the future when it comes to this sector, and we want to participate in transforming this sector also, and making us really a hub in Asia, for data science and technology, which we believe is the future.
Got it. And that's interesting. I totally agree with that. I believe big data, AI, and everything attached to that. That's where everything is headed over the next few years. And I think this is a good step to make the Philippines also competitive as well. Talking about the REITs, and I'm sure a lot of people would want to at least get insights on this. When it gets listed, the difference between buying a property is there's not really any volatility when you buy a condo or you buy a house. Once it gets listed already, there will be days that it's down, it would be in the red, which is normal when you enter into something that's equity laced. What would be something that you would want to convey to investors or potential investors on days like that? Because every investor wants to make money, but they have to realize that there will be days that it will be bad, it will be down.
When it comes to REITs, I would advise investors not to look at the price, the price of the REIT, or the stock price, because effectively what you are there for is for the yield or for the dividends, right? So a REIT would give you at least 5% dividend, so upwards of that. So effectively, how do you call this? That's what you should be focused on. The valuation of the stock should be secondary for you. Okay, it's not like a regular stock where dividend yields right now are what I think averagely on an average 2%, 3%, and then you really try to make sure that you monitor closely the prices, because you try to make your money there. So I think it's a different game. It's a different mindset when it comes to REITs. As long as it's a stable REIT, stable company with solid track record, good tenant base, good location, a long history in this business like us, I think then you can be assured no matter what happens. Some days the price might go up or down, but ultimately the price will go up, because as you continue to grow the asset base, naturally that will resound to the stock price as well, and your income also continues to grow. So I think that it's that's how the mindset you should take when you look into a REIT or buy into an MREIT.
I think our REITs are for people also like me that ayaw namin mag-customer service, ayaw namin mag-marketing ng property namin. We just want it to be passive. Yeah. We don't want the headache also of managing tenants. I was talking about this offline na pag tumalbog yung check, ikaw pa babalik doon to be able to fix all of those items. I think it takes the stress away, and there's a large chunk of people who just want to focus on their job or their business, and then just really treat the asset as an asset that's silently there and passively also not just growing but giving a return on a regular basis.
That's right.
What can people expect for your dividends? I'm not sure what can you disclose or share into this, but any insights on that?
Yeah, I think it's going to be competitive. You're looking at a 4 to 5% yield. Yeah, I think that's pretty much in line with some of the better REITs, in the market, the top quality REITs. Yeah, so I mean, definitely it's a much better proposition than other instruments, I believe. Yeah, I think if you're looking for a REIT investment, I think the strength of the sponsor should be also considered. Megaworld is the market leader in the office segment, no, by far. And you always want to put your investment in the market leader, right? I think that is the way your mindset should be, I believe. And we, again, as I said, you are not effectively just you're not just investing in the office says that we put in, you're investing in our entire township. So effectively, this is a township REIT actually. And in a township that thrives around a very robust ecosystem, an ecosystem that it is such a huge value proposition for people that live and work in that environment. And that environment is what I can tell you right now, that's what all office clients, I think all office tenants are looking for. The 15-minute city. Everyone wants to be in it. Okay, that's Isod City, McKinley Hill, Iloilo. And we have a long way to go. We haven't, like you mentioned a while ago, we haven't even considered yet Uptown. We haven't considered other townships like in Mactan, for example, in Cebu. Those will come as well. Those are coming in the next few years. We want to wait for a certain amount of population and occupancy and maturity to happen before we put it in. Because we only want to put in the best. That's why I can tell you right now, we're very careful in selecting which properties to go into this REIT. We don't just put it in whatever we can. It's very carefully selected. We only want the best, and that's what you're getting when you buy, when you invest in an MREIT. Is you're getting the best. Yeah.
So for those who want to know more about MREIT, what I'll do is I'll put a link in the description below for their perspective, so you can also do a deep dive. So please, guys, please take the time to also study, because at the end of the day, it's your money, it's your responsibility. You have to know what you're getting into, because that will give you the conviction also to deploy capital as well. And Kevin, I wanna end with these two questions, and I'm sure this will add value to people. If you are hypothetically speaking, like a normal middle class Filipino right now, what would be your approach in the midst of this pandemic, in order for you not just to save and pay the bills, but what would you do for you to be able to have a comfortable life, even at the latter portions? I guess what I'm asking is, what will be your strategy to grow wealth if you're a middle class Filipino?
As your show might have already been promoting the different investment instruments. No, if you put your money in the bank, you'll earn small interest rate lang nowadays, and you probably even lose money with inflation. So that's not the way to go. So if you were to invest it in a stock, of course, you have to always monitor it, make sure you earn from the capital gains. You put it into a bond. If you buy a bond 5-year, it's about 3.5% a year, diba? If you get a 10-year, maybe a little bit better, right? But then you go put it into a REIT. So what I'm encouraging you to do, no? If it's a REIT can make you, anywhere from 4, 5, 6%, depending on which one you're talking about, who you're investing in, no? That's very stable as well, no? But of course, for me, long term to, I put it in property. No, there are so many different kinds of properties. You can buy a condominium, and then from different price range. Condominium, house and lot, diba? Depending for your budget, because everything now you can buy to amortization. I would leave a little bit of my income for that, because I think every Filipino should own their own home. That's one thing. Okay, and property prices, they always go up. So on average, in Metro Manila, condominiums before the pandemic was growing at a CAGR of around 8 to 10% per annum. Certain years it will go up to 6. I was told certain years it will go up to 16% even. So if you own a property which you even live in, you know in your mind that after 5-10 years that the price will probably double already. And so so that's one of the things. And no matter what your budget, whether it be a property in Metro Manila or a property outside Metro Manila, house and lot, I think generally speaking, property prices are the most resilient. And we are nowhere near a bubble because we have still so many people who need homes or who don't own their own homes, right? So, and if you look at historically, that's really where the massive appreciation is. So I am a firm believer in putting some of that money in land or in property or condominiums or what. And that for me is probably my tip for your viewers.
Are you more of a house and lot type of person or a condo type of person?
Like house and lots outside Metro Manila, it also is growing, but a little bit less in terms of every year. Probably it's about 5% per annum ang growth nun, no? Condominiums in Metro Manila are, like I said, around 8 to 10%. Some of the higher end ones, maybe 11%. You've seen naman the property prices, diba? We're talking, and even during the pandemic, all these property prices, they held their ground. We didn't see significant drops in prices. If anything, it just maybe plateaued. But no, we were expecting drops in prices, and we were gonna try to, a lot of investors were probably waiting to gobble them up, but it doesn't happen.
Yeah.
And so that's what I'm saying. It's resilient. No, I wouldn't say that it's always gonna be like that. Certain crises, talagang definitely, but generally speaking, it's always an uptrend. If it goes down a little bit for 1 year, you just hold it and it'll go back up again. So I'm a firm believer in that. Between house and lot and condo, I think it's your preference. I have no preference naman. Personally, no. I think both have their advantages. Condominiums tend to be closer to where the action is, and house and lots tend to be a little farther. I mean, it's up to you, no. So it's up to how your lifestyle is, no. But I think both asset types are very, very resilient.
To end this, any words of encouragement for people who have been financially hit in this pandemic, or who are having a hard time also? I guess their earnings or their sales are not yet back to where it was before.
Yeah, it's a tough time. The uncertainty continues, no. The pandemic continues to rage, but I think naman there are certain signs of recovery already. I think that this pandemic it's primarily a health crisis that became also an economic crisis. But mind you, the economic part, I feel it's more of a suppression due to the restrictions that currently exist. No, once you remove those restrictions, I think there's going to be a huge rebound again. You can see this in the US, right? You can see this in Europe. Industries that were unthinkable last year, like travel, this year it's just they've just rebounded so fast already in the US or in these key markets. And I think that it's just a matter of time that this happens here in the Philippines as well. I think vaccinations are making quite good progress. I'm a firm believer in that. We've vaccinated by this time, I don't know, more than 20 million people already, and counting. More vaccines are coming in, so pretty soon we'll hit either a population protection or herd immunity by September, October, and then hopefully by Christmas, it's going to be much better. Then next year, of course, obviously, election year. It's always going to be a good year when it's an election year. So, so I think things are on their way up. I just hope that everyone. Yeah, my message is just, I guess, to hang in there, and just be, just ride this wave. We're almost there. I think the worst has been over already. And despite the lockdowns, I think there's still a significant improvement in the economy. So yeah, just a short. We just have to hold on just a short while.
Got it. Well said. Thank you so much for your time. Kevin Tan, President of MREIT and CEO of Alliance Global. So to everyone who's watching, I hope that this was something that was very insightful for all of you. If you guys have questions, feel free to leave it in the comment section below and we'll try to see on how we can address those questions. But at the end of the day, I hope that this helped you also. It gave you further insight on not just our REITs as a whole, but also MREIT as well. So that it's very, very important that when you invest into something that you are coming in knowing what you're getting into, because that's what's going to help you also, especially when there's volatility in the market. So that's it for now. This is Marvin Gurmo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.